This is your Greater Portland, Maine market update. These are closed sales in the last 7 days. Median numbers. Days on market ticked up to 13 days on market. The sale to list ratio still at 100%. Sold price jumped up quite a bit to $640,000. So Greater Portland market continues to be pretty stable, but inventory is increasing and seasons are changing. So keep an eye on that. Going to the national benchmarks, the average 30-year interest rate, 6.69%. The appreciation of real estate, according to Case Shiller, 1.1% annually. And of course, your US inflation at 3.5%. So all those benchmarks sort of showing a weakening market, the rate going up, the appreciation going down, and inflation higher than we want it to be. So those numbers together are likely to continue to cause shifting markets. We already have a lot of market shifting, and that's what the spotlight is about today. The balance is shifting in the market. You have 48% of markets right now have more sellers than buyers. 70% of metros have more buyers than sellers. And these numbers are only going to continue to favor buyers. Let's talk about a couple of specific things this past week that make me believe that. So the job numbers came out, negative 23,000 jobs created, and the previous months adjusted down 100,000 jobs. In addition to that, last week, the Fed Reserve voted to hold rates where they were. Remember, at the beginning of the year, we were expecting 3 rate cuts. Instead, we've gotten 0. And on top of that, 3 of the Fed members said, hey, we think we should raise the rates. When you have rates going up or likely to go up, the mortgage lenders start to price that in. They want to keep their profits. So the lenders have already started to raise the rates in anticipation of the Fed doing so. So why is this happening? It goes back to the lovely war in Iran. You just have continued broken promises here. Oh, we're going to reach an agreement. We don't reach agreement. We're going to reach an agreement. We don't reach an agreement. And every single time this happens, the stock market fluctuates a little bit. The price of oil fluctuates a little bit. We have just continued cause for inflation, and that's why the Fed is considering raising rates, and knowing that, that's why mortgage lenders have already raised rates. And when rates go up and when inflation goes up, less buyers are able to buy or want to buy. So as buyers continue to leave markets, you're going to see more of those markets shift to buyers market. So it's important for you as a buyer, know when there's an opportunity. Are you in a shifted market? Can you negotiate harder? And as a seller, it's important for you to know if you're going into a shifting market. Are the days on market going up? Are the rates going up? Is the inventory going up? And you really need to pay attention to active as well as sold listings, and be aware, what is my competition going to be when I go in the market, and what does that say about how I need to market, when I need to market, what the price should be. I hope this is helpful for you. Have a great day.